Hi there, welcome to Kneppy Invest weekly wrap up, where I look at some interesting announcements from companies during the week, July 24 to 28. Now, I've already covered quite a few of these interesting announcements, including Pointera today. I'm recording this video on the 28th of July, and I did a standalone video for that company because their share price rose by more than 100% in one day. So I thought I should do a standalone video on that company. Also did a standalone video on Megaport, EZZ Life Sciences, and some of the companies I completely forgot right now. Anyway, so today's focus is some other interesting announcements during the week, and we have seen the share price respond positively or negatively to those announcements. But before we have a look at that, let's have a look at some interesting news flow from around the world. And most of these are investing related, but there's one not. Although you could say this is investing related, because if bees all died off, then there's no investing for any of us because we would have not long to live on the earth. So bees have been declared the most important living being on earth. Now, I'm not sure if that saying from Albert Einstein should be attributed to Albert Einstein. Apparently he said, if the bees disappear, humans would have 4 years to live. I should have to do some research on that just to see if he actually did say that. But it should be known, and hopefully most of you do know, that bees are very important. In fact, when I do any research on almonds, that sort of thing, and if you do research on almonds, you just see how important bees are to our food supply. So it's very good to see the bees are declared the most important living being on Earth. So congratulations, bees. You are more important than humans. And to be fair with you, that should be no surprise. So let's go to some other interesting tweets. And I think most of these are tweets. Actually, let's have a look, not a tweet. For those who don't know, Stephen Van Meter, he is the ultimate bear. He releases like a video a day. He's fairly popular, 186,000 subscribers. And this is a video he released quite a few days ago, 8 days ago, according to this. Doomsday is here and why it will be worse than the GFC. So all his videos are like this, doomsday scenario. So let's go to his homepage. So let's have a look at some of the titles he have released recently. This industry is collapsing. This is alarming. I can't believe this will send shockwaves through the economy. These economies are collapsing. Urgent warning, they are panicking. Global trade is plunging. This is shocking. It's breaking. The collapse begins. He has found his niche. And there are people who are drawn to this sort of bearishness, and people absolutely love it. So have a look at him if you want, particularly if you are a bull. And I believe you should always look at the opposite side of the spectrum to get full 100% or 100, well, actually, it should be a 360%, 360-degree perspective. And the problem with a lot of humans is when they do have a belief or a thought or whatever, they go to YouTube and they just look up anything that verifies their belief, that backs up their belief. We should be doing the complete opposite. We should be looking at stuff that challenges our beliefs. And that's how we grow as human beings. Unfortunately, most humans do the complete opposite. So for those who are fairly bullish, have a look at Stephen Van Meter. And there's also some other people I look at as well, because I'm ultimately fairly bullish and I do want to look at the bear side of things. Now onto some interesting tweets. This one's from Brian Ferroldi. Do know the name. I'm not sure exactly what he does. I used to sell my winners to feed my losers. And I'm sure a lot of us can sort of relate to that. My returns improved dramatically when I learned that the stock market rewards the exact opposite strategy. So ride your winners, sell your losers is the best strategy you can have. It's taken me a long time to really figure that out. And I am learning right now using my 1 hourly trading strategy. It absolutely works. I've already sold out a few of my losers, in fact, one, and I've already taken my winners and held on to my winners a little bit, and it has done wonders. At this point in time, I'm up 12% in this strategy since the start of the financial year, when the overall market is up, say, 2 or 3%. So it does work, this strategy, to ride your winners, sell your losers. Anyway, but I'm pretty sure he's talking about the long term. And I think that this strategy works for all sort of time stages, whatever you want to call it, time frames. That's the word I was looking for, time frames. In fact, that's 2 words. This is from Quarter. Something I did sign up to in regards to, I forget exactly what they do. I think if you want to look at American companies, briefings, that sort of thing, conference calls, you go to Quarter, Quartr, and you can get all the information straight from that website. And this is in regards to Tesla's earnings. And they mentioned it was absolutely wild. Elon gave investing advice, cited Benjamin Graham, and claimed Tesla could 10 bag from here. $9+ trillion. Now, for full disclosure purposes, I actually am a Tesla shareholder, but it's just a trade I'm doing. And who knows, maybe Elon Musk is going to be absolutely right. Autonomy will make all these numbers look silly. I recommend looking at ARK Invest. Straight away, he loses my belief there because they're a little bit too ambitious with their forecast. I think their analysis is very good. Of course they do, because they think Tesla is the greatest company in the world, in the history of the world, in fact. It's the best, and generally FinTwit or the smart finance people on Twitter, follow their accounts, they're great. So that's, in my opinion, where you'll get the best info. And he believes that the best info is those who are really bulls on Tesla, not the other way around, which I was just talking about. He should be looking at those who are not bulls on Tesla to understand why they're not bulls on Tesla. And I think in that way, if he can take some opinions that are a little bit different than the bulls, then he could actually turn Tesla into possibly the greatest company the world has ever seen. They're just plus a reminder to buy and hold. Elon recommends buying stocks in companies who make products you love, then goes on signing Benjamin Graham, which is fair enough. Apparently, Tesla's Model Y became the best-selling vehicle of any kind globally in Q1. Anyway, Elon says he thinks it's ridiculous that Tesla has positive free cash flow. I can sort of understand what he's saying there. Okay, anyway, that's on to that. Now to Nick Gurley. Is another mortgage crisis brewing? Homeowner debt-to-income ratios are now approaching 40% in the beginning of 2023. That means home buyers are now spending 40% of the gross income on mortgage interest costs, same level as 2006. I understand what they're coming from, and I understand where a lot of people are coming from. This increasing interest rates only hits a small segment of the population, maybe 30 to 33%. There's a lot of people who own their own homes. I own my own home. I have no mortgages. I don't have a debt. So rising interest rates does not affect me at all. The only thing that affects me is inflation and wage decrease, relative wage decreases. So that's the only thing that really affects me. Interest rates rising don't affect me, but home buyers, those with mortgages, it would affect. It's a little bit different in the United States because the majority, if not everyone there, has fixed mortgages. So it doesn't really affect those people, but it does affect if they want to move and sell their house. In fact, I'll show you a tweet about that in a second. And here's part 3 to this particular tweet, looking at the comparison between mortgage defaults and unemployment. And this should be fairly obvious that if unemployment goes up, we're going to see mortgage defaults go up. And he's just showing there is a pretty good correlation between the two. And I think, to be fair with you, that is fairly obvious. And honestly, we're all looking at unemployment. As soon as we see unemployment goes up, more than likely a recession will be declared in the United States. There are questions about whether a recession will hit the United States. Remember at the start of the year, when I said in my prediction for 2023, I don't think we're going to go into recession. And I was talking about United States, and that's me being a little bit bullish, even though all the signs are there that we should be going into recession. And when I say we, I'm talking about United States. So that's that. What's this one? Oh, yeah, this is from Trueflation, an article from, I think this is the New York Times, from Jeff Summer, saying the markets are counting on the Fed to solve a tricky puzzle, saying that this soft landing, the market is saying this soft landing is going to be achieved. There was also an article in the Sydney Morning Herald exactly saying this, saying the market is suggesting that everything's going to be okay. Now, the problem with this, and even though I am a bull, the problem with this is the exact same thing happened before the GFC. The same thing happened in 2000 before the tech bubble burst. Everyone was thinking there was going to be a soft landing, and it did not happen. So who knows what's going to happen now? And the market is expecting something completely different. If the market is wrong, we are going to see a significant correction in the stock market. And, this is one from Michael A. Arrow. And this is, I'm researching a lot of American companies. And the thing that I absolutely despise when I research American companies is how much stock-based compensation they have over there. So I'm not sure what company this is. He says its stock-based compensation is the 8th wonder of the world. And this company had a massive loss. This is this is numbers per quarter. So in the last quarter, this company lost, I'm not sure who it is, 377 million. Stock-based compensation was 318 million in one quarter. And adjusted EBITDA, of course, they probably said that in any sort of media release that they were almost EBITDA positive. But for some reason, companies over there just love stock-based compensation, and it's just makes me. I can understand why they do it, and they believe it gives workers an incentive if they're getting money back in stocks instead of cash. So I can sort of understand it, but this is way too much. So I'm not sure which company, I'm going to say country this is. I'm trying to find if it says what company it is. Yeah, it doesn't say. No one said anything. I like this one. EBITDA is a BS, but adjusted EBITDA, it's sacrilege. Yeah. God of investors, please forgive the innocents that look to adjust. I sort of agree. I really agree with that. I hate EBITDA, hate adjusted EBITDA, all those sort of things. It's just twisting the numbers to look or make it more favorable. Next on to Alex Kaplan. Okay. So this was an interest. This is not an investing tweet. Today, you might have seen the biggest physics discovery of my lifetime. I don't think people fully grasp the implications of an ambient temperature pressure superconductor. Here's how it totally could change our lives. Yeah, personally, I don't understand, or I can't fully grasp the implications of this. I've heard or read a few things about it. And in fact, I haven't gone through this whole tweet and why it's going to totally change our lives. Maybe I should, but even some of the words here just going straight over my head. But anyway, so possibly one of the biggest physics discovery of my lifetime. I prefer to watch the news on the aliens and UFOs in America. What do they call them? UHFs or UHAs? UHAs? Anyway. Oh, yes. And so Microsoft, Google, Alphabet, a few other companies released their quarterly results during the week. In fact, I did listen and watch. In fact, it wasn't watch because I just had a sort of a blank screen. But I did listen to Google, Alphabet's briefing, because I am a shareholder of both of these companies, and it's not surprising that Microsoft and Google executives said the word AI or a version of it 145 times during their earnings call, which would have been on our Wednesday. Not surprising at all. That's from investing.com. Now, this is from Ottavio Costa, who is, I'd say, a bear. He's also a fairly big commodity bull, talking about the relationship between, or the disconnection between the NASDAQ 100 stock index versus the US 10 Treasury. They should be, according to him, they should be fairly positively correlated, but they've diverged over the past 8 months or so. So there should be either a correction in the stock market or interest rates should start going down fairly quickly, according to what's been happening on the stock market. The only problem with this is this chart only goes back to 2021. And I have mentioned in previous videos that even though there is this belief that interest rates and the stock market are correlated, so negatively correlated. So if interest rates going up, stock market should go down. If interest rates go down, stock market should go up. I have shown you in the past that's not always the case. In fact, during the GFC, we had the stock market and interest rates going down at the same time. And we see that a lot during recessions, that they both can go down at the same time. So that could happen again next year or from a few months from now. We could see interest rates going down. And the bond market is saying interest rates will go down over the next year. And in my opinion, the only way we're going to see a significant decrease in interest rates if we do go into a significant recession. All right, this is really interesting. This is from QE Infinity. The drastic drop in housing inventories historically in the chart. New listings have absolutely fallen off a cliff. Everyone's stuck in their 3% mortgage. That is the most important part of this tweet. Everyone's stuck in their 3% mortgage. So this is a US related tweet. So again, they're all on fixed mortgages. So if you're on a fixed mortgage and interest rates have just ballooned up significantly higher, what's the last thing you want to do? You want to move. You don't want to move at all. You want to stay where you are living. This is why new listings have absolutely fallen off a cliff, because interest rates have risen. Probably the only way you might move is if, or move house, is if it's because of a job, and maybe the job is going to pay for you for that move. So that's why new listings have fallen off a cliff. The other side of this is home constructions in the United States is absolutely booming. That's how they're getting new supply. Because of the lack of listings, they have to build more houses. So we're starting to see a massive supply of new housing coming onto the market over there, and we should see coming onto the market. And not only that, home builders in the United States are absolutely going bonkers. Unlike here, they're all falling apart. So completely different worlds when you compare US to Australia, simply because they have fixed mortgages and we have mostly variable mortgages. Okay, so that's the interesting tweets during the week. Don't really need to look at the best performing companies today. We already know Point Terror is, followed by Foslock. So let's have a look at some of the interesting announcements during the week. First one is a company called Quickstep Holdings, and we'll look at the announcements here. So they released a trading update on July 2023. This has been a very disappointing company. I owned this company once, and they have disappointed me time and time again. So this was a more positive announcement, talking about how their revenue is starting to go up again. This is their quarterly performance, financial year 22, financial year 23, looking at half years. So revenue is in the blue, and EBITDA again. They just love EBITDA. I want to know profit and cash flow. I don't care about EBITDA at all. It's a foolery. It's nonsense. So EBITDA, excluding FX and impairments, of course. That was almost negative 1 year ago. Now it's turning back positive, and we're starting to see revenue increase as well. Now, this company does have really low margins. If you don't know what this company does, all you have to do is go to the About section. The largest independent aerospace composite business in Australia, with facilities around not only Australia, but also in Dallas, employs more than 280 people. So things look like they're moving in the right direction from the company, but the market is not so sure, unlike Macquarie Group, which we'll talk about in a second. So Quickstep, I looked at this company many, many years ago, and I liked what they're doing. I liked, this company looks really interesting. But when you look at, actually, in fact, we'll have a look at the monthly chart, because you just see it. This company just has been in a monthly downtrend ever since 2006 or 2007. Share price at one point in 2007 got as high as $10. Maybe there might have been some stock or share consolidation, that sort of thing. Anyway, share price, long-term downtrend, is still dropping, almost at the all-time low. If you look at the daily chart, it's still falling. Went through a nice little support level in March. That support level was they've definitely done a consolidation, because the share price, if I remember, when I bought, was less than 10 cents. So they've definitely done a consolidation at some point in the last 10 years. And this particular announcement did cause initial excitement. Share price did rally about 10%, but that excitement has died down. And the main thing I'm looking for here is really good volume. You can see really high volume on the 21st and 22nd of June, and that's when the share price did reach its low. Yeah, so that's fairly important. When you do see a share really high volume coming in at that point, that could be suggesting a low has been reached. So a possible low at a share price of 22.5 cents. So really big volume, 3 days in a row, in fact, and then a nice little rally in the share price. So even though this might be a good announcement, things are moving in the right direction for this company. I need to see more proof. I need to see profit and also cash flow. Free cash flow is the most important thing for this company, because they would be fairly capital intensive and that sort of thing. Next one is Korvest. This company has been around for a very, very long time, and they released their full-year results. Typically, this company is the first company to release their full-year results. They release them towards the end of July or towards the end of January, and they release their results on the 24th of July. So let's have a look at their full statutory accounts. So first thing I always look at is probably this little sort of highlight section. Revenue's up, profit down. That doesn't mean anything at this point in time. Earnings per share down a little bit, but revenue up. But the first thing I always look at is the cash flow statement. And of course, there it is, cash flow statement. So first thing I always look at is cash flow statement. It's really interesting. So we can see this year's numbers compared to last year's numbers. So receipts up from 110 million to 123 million. But you notice that the cash flow from operations went from $4 million to $15 million. So this company was operating cash flow positive by $15 million. So remember that profit was, what was their profit again? I forget. It's like $11 or $12 million. So more significant cash flow in operations than their profit, and a significant increase in operating cash flow from last year to this year. So why is that? Well, we can determine why that is by just going to note 15. The other thing I look at is investing and financing activities, and the only significant number there is dividends paid. So this is the dividend paying company, $6.9 million in dividends, and they had enough cash, $8.9 million of cash. So let's go to note 15. So this is one of the most important notes, or one of the most important sections of the, what do you call this, financial statements. And what this is, reconciliation of cash flow from operating activities. And this is how we determine if there is a difference between profit and cash flow. This is how we determine that. So this year, the profit was 11.2 million. Last year was 11.3 million, so slightly lower than last year. But the cash flow this year was significantly higher than last year. And in fact, the cash flow in operations significantly higher, well, not significantly higher, almost $4 million higher than the profit. So the things we are looking for here are changes in trade receivables, changes in trade payables, changes in inventory, so changes in working capital. And without even looking at this, I knew it was probably something to do with inventories, because most likely last year, because this company sells stuff, they build up their inventories because of supply chain issues, that sort of thing. And then this year, they've wound down those inventories. So we're looking at changes in inventories in this lower part of this particular section, and changes in inventories is positive $3.5 million for this year. And that doesn't mean they've built up their inventories, it means they've decreased their inventories. And last year it was negative 8.1 million. So they spent a lot of money to build up the inventories last year. So if you add that back last year to the cash flow from operations, that means the cash flow from operations, including inventories, was 12 million. And this year, if you take away 3.5 million from the cash flow from operations, you get 11.4 million. So a little bit lower than last year, and the profit was a little bit lower from last year. So I do know some people who just like to look at cash flow statements. In fact, they ignore profit and that sort of thing, and it can put you in a little bit of a bind. So you might think Korvest performed really, really well this year compared to last year, just based off their operating cash flow and their free cash flow. But you always have to look at changes in working capital, and that's why profit sometimes is the best thing to look at, particularly if there are large changes in working capital. So I look at all things. I look at the cash flow statement, the balance sheet, and the P&L statement as well. So that's all I'm going to talk about when it comes to Korvest. The market didn't really react. Let's have a look at the charts first. So Korvest, if we look at the weekly chart, so this is a company that can be quite cyclical. In fact, I didn't even know this company existed back in 2017. The share price got as low as $2, but look at that beautiful chart since about 2018. Share price has increased from $2 up to $8, so a four-bagger in a fairly short period of time. And the last time the share price was this high, above $8, apart from a very short period of time back in 2013, was maybe never. This company's been on the ASX for a long time. Anyway, so all-time high, almost all-time high for Korvest share price. Okay, yeah, revenue up a little bit, profit down a little bit, but everything's moving in the right direction for this company over the longer term. Whether they can keep this up remains to be seen. Now onto Mader Group. I've mentioned this company has released a few profit upgrades in the past, and typically I'm really attracted. And when I say attracted, I will take positions just when I see a profit upgrade, even if I don't know a company really well. I did not do that for Mader Group, and I won't say it's a mistake, but it just shows you, because this company has released a few profit upgrades. So they released their fourth quarter financial year 23 quarterly operational update, and these are beautiful numbers. So the main thing we're looking at here is revenue up 46%. So we're looking at previous corresponding periods, so the fourth quarter last year. So revenue up 46%, EBITDA again, 56%, EBITDA margin up from 12.7% to 13.6%, net debt down by $8 million from 50.9 million to 42.7 million. And the most important thing here is Mader reaffirms its profit will be at least 37 million, initially 33 million. So at least they're talking about profit here, not just EBITDA. And this profit forecast or expected profit has been upgraded twice. So initially it was 33 million, upgraded to 35.5 million in October, and further upgraded to $37 million in February 2023. And then you have a look at the chart. This company hasn't been listed long, so I don't want to look at the weekly chart. Look at the day. This is a beautiful chart, and I do own quite a few companies with beautiful charts. Unfortunately, Mader Group is not one of them. And whenever this company does release a profit upgrade, we don't see a massive response to the share price, but the share price just keeps on climbing. So, and the share price is an all-time high right now. So even though today was a big down day on the market, share price of Mader Group only down 1.85%. Anyway, and you can see whenever the share price does a little bit of a dip, a little bit of a retraction in the share price, like in March, that's the time to buy when the share price gets towards the 150-day moving average, which is this solid blue line. So everything going in the right direction for Mader Group. Now, a company I do own, based off an announcement the company did release. No, it wasn't an announcement, it was just a chart. Was Catapult Group, a company I have owned numerous times in the past. And you'll see why I've owned this company a few times in the past, but I've not ever held on long term. And that'll be really relevant when we look at the chart. So Catapult reaffirms free cash flow positive guidance after strong quarter. My only problem with this announcement, if I did find any holes, it's a little bit wishy-washy. So they're talking about the highlights, ACV growth exceeded 20%, revenue growth exceeded 20%, annual ACV churn, low levels below 5%. Catapult reaffirms its guidance to be free cash flow positive in financial year 24 following a strong quarter result. So that did get the market excited. I probably would prefer some numbers. That's probably what why I'm just putting a little bit of holes in this announcement. I do prefer numbers, not stuff like we will be free cash flow positive financial year 24. Well, you could be $1 free cash flow positive, and that's a little bit different than $5 million free cash flow positive. So that's probably the only negative thing I could say about that announcement, but the market loved it. In fact, the share price of Catapult rose today, even though the market was down. So let's have a look at the Catapult share price. Let's have a look at the weekly chart first. You can just see what I mean. The roller coaster ride for shareholders in this company have been. Here we go. Yeah, so it's been a roller coaster ride ever since they listed back in late 2014. Heaps of excitement in this company in 2015-16. Share price went all the way up to about $4.50 and all the way back down to 62 cents. And that's been trading in this range between 62.5 cents and $2.25. And it just bounced off that bottom of that range in about 3 or 4 months ago. But when you look at the daily chart, the share price has moved into an uptrend, and a beautiful uptrend. Really high volume coming through as well. I sort of ignored these spikes in volume. That's telling me maybe there is a fund manager buying on one day, or there is an exchange of shares between one fund manager and another on those days. But a beautiful chart. We had a nice takeoff in the share price. This is when I bought, when we saw this takeoff in the share price towards the end of May. And then the nice little correction in the share price hit the 150-day moving average and has taken off again. Some good volume coming through. I probably would prefer a little bit higher volume. The last time the share price was this high at $1.20 was back in May of 2022. So we're at a 1-year high for this company. Another company I have held a few times in the past is Envirosuite. No longer a holder of this company. Quarter 4 sales update, record quarter, 6.8 million sales. It sounds good, but so new ARs increasing, total ARR, it's very nice, but they're not talking about, they're talking about sales, ARR. I want to know cash flow and profit. That's what I want to know in Envirosuite. I want to know if you have reached that very important inflection point. So the main reason I'm out of this company and why the market is not in love with this company right now is this company is loss-making. Now, I think there was a nice little reaction to the market. Not much of a reaction, to be honest with you. And let's have a look at the chart. Let's have a look at the weekly chart first. And this sort of weekly chart doesn't fill me with excitement. And again, a lot of volatility, particularly from the end of, so the last 4 years, the share price has just, ugh. But share price, so during the COVID-19 financial panic, share price got to about 8 cents, got very close again in June 2021, and bounced off it again in June this year. So a few weeks ago, just bounced, or like a month ago, bounced off that level. If we look at the daily chart, beautiful bounce off that level. So it got down to 7.5 cents and then bounced. So that would have probably caused some people to be nervous because they would have known that level was a support level. But I don't think of support levels as one price. I think of it as zone. So that support zone would have been between about 75, 85 cents. And it's bounced off it, but really no reaction from the market in regards to this announcement. Share price still in a downtrend. And if it falls below 8 cents on strength, and stays below 8 cents, that would be fairly negative for this company. But I'm not sure what the market cap of this company is yet or now. I'm assuming it's less than 100, 116, still fairly expensive. So the market still is pricing in a lot of cash flow, future cash flow for this company with a market cap of 116. So there is significant downside if they don't achieve any sort of path, or probably the best way is if they don't convince the market they are on a path to profitability and cash flow. Anyway, I do hope all the best for Envirosuite. Not sure if I show you this company, Paragon. I'll do this one really quickly. They did a trading update. It looks actually really good in terms of increases. So they're just using underlying EBITDA. So 38 million, increase of 35% on the equivalent underlying EBITDA reported for financial year 22. They're just talking about EBITDA. They also talk about the net debt position has improved from $70 million to $64 million. One of the main reasons I wouldn't even think about investing in this company is their debt. Now, they do have a fairly, I'd say the market cap is maybe 200 million. Let's have a look. 151 million. So that's still too high in my opinion, because with their debt, the enterprise value is 220. Now, I once did a trade in this company. One of my first ever trades in my whole life was this company. And that trade was way back in 2014. So I did this trade just after my very first trade, which was M2 Communications, when I realized, wow, technical analysis does work. And I bought this when the share price was around about 30 cents in September 2014. And then the share price went from 30 cents to 94 cents. So a nice tripling in the share price. I did not hold it during that rise in share price. I sold out when the share price doubled, took my profits and ran. And really from there, this company has done nothing. So not that excited in that company at all. That's one of the reasons why I wasn't going to show you. Now, a company I do own for the long term is Corporate Travel Management. And they did released trading up profit guidance. Profit guidance. I think the main reason I wanted to show you this announcement is it was a good announcement. In my opinion, it's a good announcement. So revenue up 90% on pro forma financial year 19 revenue. So they're comparing fourth quarter revenue to fourth quarter financial year 19 revenue. And that's probably relevant because we want to know how these travel companies are doing compared to financial year 2019, not to financial year 2020 or 21, because those were COVID-19 affected years. Now, this company has made a few really big acquisitions, and I do think this is a much stronger company than it was back in 2019. The share price or the market disagrees with me a little bit, and it's really interesting trading on this day. So actually a good week for, this is the weekly chart, so a good week for corporate travel. And let's have a look at you can't really see in the daily chart. So let's have a look at the hourly chart. And you actually can see it here. So on the first hour of trading on the 26th of July, the share price opened at $20.80. Actually, $20.61, went to a high of $20.80. And then in that hour, the share price went from $20.80 to $19.20. That's why we had this really bad 1 hour candlestick. I'm not sure what happened then, why there was all the selling that came onto the market in that 1 hour. And then the share price has just gone up again. So I'm not sure what happened. And if we have a look at let's have a look at the 5-minute chart, you can just see the massive amount of selling in that first 5, 10, 15, 20 minutes of trading. So the share price opened above $20, and then within 15 minutes, the share price went all the way down to $19.20. So massive volume as well. So more than likely, this was a fund manager just selling on market, just saying, we're dumping on market. We don't care what it does to the share price. And then when they finished selling, the share price started rising again. Intriguing what people do when they want to sell. I would never dump on market because you're going to get worse prices. Just when you got supply, there's enough supply to meet the demand at those highest prices. As you can see, share price kept on rattling after they sold out. Anyway, so intriguing trading when it comes to corporate travel. I am bullish about this company for the long term. Market only down 0.7%. It was down 1.2% at one point during the day. Now to a company that is no longer going to exist. Kleos Space. Company update and bankruptcy. So another company's gone bye-bye, and they just said, well, we can't get funding, so we're going to go bankrupt. Not in Australia. They have operations in Luxembourg. So we'll accordingly petition the relevant commercial district court in Luxembourg for a bankruptcy adjudication. So this company has something to do with satellites. That's all I know. Space. And actually, if we have a look at the chart, I would not be surprised if at some point during the past 5 years, whenever this company listed, there was some period of time when there was massive excitement in this company. In fact, that was 2021. Share price of this company went all the way up to $1. Now it's 10 cents. Thought it might have been listed longer than that, but no. Anyway, another company gone bye-bye. ASB, Austal. Okay, this is one of the most interesting happenings on the ASX because this company announced a couple of massive contracts, $63 billion contract with the US Navy, which caused a massive excitement in the market. And then the company on the 26th of July released an earnings guidance update, and this was a very negative update, really negative, going from being profitable to loss-making, although I think these are impairments and one-offs. So based on the outcomes of a review, EBIT guidance for financial year 23 reduced from earnings of approximately $58 million to a zero profit to a potential loss of $10 million. Despite their significantly reduced EBIT guidance, they retained a healthy cash at bank, blah, blah, blah. So sometimes the market can be very short-sighted, very narrow-minded, and just look at an announcement in the short term. And we did see a pretty big sell-off when it comes to Austal, even though they announced, if we have a look at the daily chart, you can just see how the share price took off because of that $3 billion announcement with the US Navy. I think I did a video on this. Share price went all the way up to resistance level, the previous high we saw back in August. Look at that, perfect. Again, technical analysis works. So that people knew, investors knew, not only investors, traders knew that high at around about $2.80. As soon as it gets to that, sell. And it's just a self-fulfilling prophecy. Resistance, support areas. Not all the time, but it happened here. It happens a lot. And then the share price sold off. And then when the company released this earnings update, they're going to go from being profitable to possibly loss-making. Share price plunged about 20%. In fact, the share price dropped from about $2.55 down to $2. And I saw that. I was thinking, ooh, should I take put a sneaky bid in at $2? But then the share price bounced. And we can see that in just the 1 hour chart, if I can find it. So look at that 1 hour chart. You can see the share price bounced off not perfectly again, because it's a zone, resistance zones. Bounced off that resistance zone, went from $2.80 down to $2.55. Then the company released the negative announcement, and then the share price in that first hour was at a low of $2.01 and a high, and actually closed at $2, if I can see it here, $2.27. So there was a nice 10% bounce in that first hour. So congratulations to those who bought in that first hour. Pretty big volume. And I wouldn't be surprised to see the share price struggle from here. It was sort of like a 1 or 2 hour trade, in my opinion, but I wasn't convinced it was going to bounce like that. But it's okay. It's okay. Now on to Playside. This is a company I own for the long term, so I don't really follow this company all too closely. And they released 2 announcements this week, so I won't talk about their Appendix 4C, although they were operating cash flow positive. They had an announcement called New Dumb Ways to Die, title coming to MetaQuest. I was like, is MetaQuest's Facebook? It is. It is. It is. So they're just following successful concept pitch. Meta has engaged Playside to bring its Dumb Ways to Die original IP to MetaQuest devices via the development of a new VR title. So no real mention of revenue, but they did give some financial year 24 guidance, and they expect revenue to be between 50 and 55 million, which is significantly higher than financial year 23. So this is just, the reason I'm a shareholder of this company is just a potential in the future. I don't have a very large position, and my position has fallen because, or the size of my position has fallen, because the share price of this company has been in a downtrend. Well, it was in a downtrend. Wasn't a downtrend. Does look like sentiment's starting to shift for this company. Down a little bit today, but that's understandable. So it's bounced really nicely. So I think maybe the low has been reached for this company. However, there will be a little bit of overhang of shares on the market because share price has been significantly higher than this. In fact, the last time the share price was this high was only in February. So we're talking about 5 months ago. And so there's still going to be a fair few shareholders out there who want to sell out of this dog stock, and that is demand. Or should I say, that is supply of shares, and we need extra demand to buy that extra supply of stale shareholders. Anyway, long-term view of that company, just a long-term view. I don't care about the short-term fluctuations in the share price. Kogan. So I do have a trading position in this company, down 4.5%, but that's okay. They released a business update, and I suppose it's positive. So adjusted EBITDA up. Gross sales down. Exclusive brands down. Third-party brands down. So in fact, gross sales down a fair bit, 22.5%. Doesn't seem like the market cares about that. They only care about gross profit, which was down. So maybe the market only cares about adjusted EBITDA and adjusted EBIT, which are both up fairly big. In fact, 624% for adjusted EBITDA and 136% for adjusted EBIT, although that 624% for adjusted EBITDA is on a low base. That base is 1.6 million. So the market liked it. I was unsure whether the market would like it because I really noticed the decrease in sales. That was fairly significant, and this is a beautiful chart. Look at the 1 hour chart. I do have a stop loss at $6.20. It's getting fairly close. But yeah, share price is in a beautiful uptrend. I was thinking of selling on this day, the 25th of July, when we had this 1 hour, when the share price fell 4.9% in 1 hour. And I was thinking, if it doesn't rebound in the next day or so, I will take my profits. But it rebounded beautifully on the back of this particular announcement. And no concern that we have seen share price pull back about 5% because it's just pulled back into the green zone, which is a support zone, and it's sort of a buy the dip zone, if you will. And the day chart looks beautiful as well. So this is in a 1 hourly uptrend, a daily uptrend as well. Get rid of that stop zone, stop point. And the last time the share price was this high was way back in February 2022. So we're talking about an 18-month high when it comes to Kogan. And definitely, in my opinion, sentiment has shifted positively for this company. Macquarie Group. It's going to be interesting to see what happened to Macquarie Group today. I don't know. Let's have a look. It's up. So yesterday it was down 4.3% because they had their AGM. And let's open their media release, because the thing that really stuck out to me was key points: weaker trading conditions with first quarter 24 operating group contributions substantially down on the prior corresponding period. And the main reason behind that was their commodities performance was significantly down on previous corresponding period, largely driven by reduced trading activity across gas and power. Is Macquarie Group a cyclical company because of the commodities part of their business? Anyway, this is a cult stock on the ASX. So even though this was a negative announcement, share price was always going to be supported by those who want to buy the dip. Now, in saying that, when you look at the weekly chart, share price is just going sideways, but in long-term uptrend, mind you. And if you look at the daily chart, you can just definitely see how the share price is just going sideways. And if the share price falls to say $150, more than likely that's a good buying price. And if it falls below $150, that would be a bad sign moving forward. So no trend in the share price right now for Macquarie Group. I do think this company is a little bit overrated, in my opinion, when you look at the numbers. But you could say there's fairly good value with this company. P ratio 13.3, but that could be the market saying this company had it better than it should have financial year 23 because of the commodities part of the business. Anyway, that's a Macquarie Group. Next, we're going to look at Redbubble. So share price gone up again today. Share price of this company's gone up 18%, 23.7%, and 4.2% in consecutive days. Share price has increased from 410 or 41 cents to 62.5 cents. Share price has increased 50% in 3 trading days. Why? Maybe I should have done a standalone video on this company. Why? Redbubble receives favorable rulings from US appellate court. I opened it up, I read it, I went, yeah, who knows? Something about intellectual property infringement. This was, I suppose, a good, favorable ruling for Redbubble. Not suppose, it was. I think this announcement means that Redbubble are not liable for anyone who does infringe on whatever they're calling it. I don't know what they call it. What do they call it in the announcement? On property infringement, that's what it is. They're not liable. So they're not the ones. Redbubble should not be looking at what people are doing on their website in terms of intellectual property infringement. So probably a good announcement for Redbubble, and the market agrees. So look at the chart for Redbubble. This is another sort of mistrade for me, possibly, but maybe this is a breakout for Redbubble because a beautiful share price, long-term downtrend. It's gone from all the way down from about $7.50 to 62.5 cents. And then look at the last 3 days. This has possible breaking out, but last time share price was this high was December last year. So not a 1-year high, but just really bullish trading. But the volume is fairly low. That's probably the one thing that I did notice is the lower volume than I would like. But just looking at the 1 hourly chart as well, it's really taken off. And funny thing is, the share price really took off the day after they released this announcement. So on the first hour of trading on the Thursday, 27th of July, share price increased in this hour by 32%. Share price has gone sideways, nice little consolidation period. So possibly this could be a nice little buy on Monday next week. Not sure I would do it because I'm not a big fan of the company. G50. Gold 50, hands up who has heard of this company? Not me. I had never heard of this company. I just saw the announcement, 308 meters at 28.6 golds per ton. Now, the depth's fairly low, but that gold per ton, or grams per ton is fairly high. And I thought, oh, it's going to be really interesting to see how the market reacts to this. Now, you might see a share price down 9%, and then yesterday the share price was only up 15.8%. But let's have a look at the chart, because this is a really interesting chart. And this is why sometimes you should not buy on open or near open, because if we have a look at the 5-minute chart. So in the first 20 minutes, the share price went from 19 cents to a high of 48 cents. So more than doubled in the first 20 minutes of trading. And then the selling came. And that selling has been absolutely persistent since then and has driven the share price all the way back down to where the share price started. So remember, the share price went from 19 cents to 48 cents. Now it's 20 cents. So this is the very definition, I won't say a pump and dump, but the very definition of share price not being able to be sustained. I was going to say the share price must have been higher. No, so this doesn't look like this company has been on the ASX for very long. It was an all-time high, so no overhanging shares, but obviously there were some retail investors who got a little bit too excited, and some traders got in there fairly quickly, probably on open, and sold really quickly. And those traders just sold en masse. So a lot of supply came on market, and there wasn't enough demand. So this is like one of the worst looking one-day candlesticks you can see, where you have the body down low and a massive shadow above the main body. That tells you there's a lot of selling going on and not enough demand to meet that selling. So Gold 50, first time I've ever heard about this company. I don't really follow mining exploring companies all that closely. And the last company I want to look at is Unibail-Rodamco-Westfield, because this is a company that also have released their results 27th of July. Thought there was going to be some companies that released interesting announcements today. I didn't write any down. Anyway, I'm not interested in this company at all, so I'm going to ignore URW. The only reason I follow this company is the chart, so I would only trade, can't even pronounce it, URW, Unibail-Rodamco. They should change their name to something easier. And when I look at the chart, it's nowhere near exciting. So weekly chart, oh, that's horrible. Daily chart in a downtrend. The only reason I might get excited is if the hourly chart looks okay. And it did look okay for a period of time from the start of June through to about now. Share price went from $3.50 to $4.35. That was a nice little trade just based on the 1 hourly chart. But this is not a company I would own for the long term. More than likely, the numbers are pretty good. Anyway, that's probably all I've got for this video. Time is 5:16, so I'm doing this video for over an hour. Geez. If you have any questions about any companies I've mentioned in this video or any tweets I've looked at, just leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you need a financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.